What's going on, everybody? Good morning and welcome back to Beat the Bell presented by Kane Capital. I hope that everybody had a phenomenal Passover, phenomenal Easter. We're ready to go. We missed NFP on Friday. The markets were, of course, closed. So we're going to get the chance to talk about that today, as well as everything else we've got coming up this week. Excited to get back to trading. Let's bring on our panel, starting with Money Mander. Money Mander, good morning.
Good morning. You know we got you covered on Fed forecast for the data on Friday. We'll get to that in a second.
All right, Diamond Trades.
What's going on, guys? Hope everybody had a great Easter. Super excited for this week. Should be very interesting. A lot to cover.
All right, Moe Mamba.
Good morning, boys. Just wondering what happened to the market where futures are spilling here. So not sure what happened there, but we'll definitely get the scoop from Diamond and Mander here.
All right, Stock Snipa.
Good morning. Hope everybody had a good Easter. Hope everybody got some egg hunting. It's time for some bag hunting now.
I love it. All right, and last but not least, Ramsay Rippers.
What's up, guys? Happy Easter, new week. Let's get after it.
Let's do it. All right, diving straight into Fed forecast and economic calendar.
Yep, let's go ahead and start with this week's economic calendar. So for this week, early in the week is going to be pretty light. We've got not really anything during the market, but we do have 3 Fed speakers after the market closes. So 1 on Monday and 2 on Tuesday. The week is going to heat up on Wednesday with CPI, core CPI, both coming before market open. And then we will have that FOMC minutes release. So it'll be the release of the minutes from the March meeting. No new data there, just a more detailed, I guess, explanation of what exactly went on at the last FOMC meeting. PPI on Thursday measures inflation for producers. Those initial jobless claims, those weekly jobless claims that we get every week. And then on Friday, retail sales, a Fed speech right before market open. And also Michigan consumer sentiment is going to come in at 10 o'clock. So the end of the week is definitely going to get busy for us as we go ahead and really get into Q2 here. We can move on to earnings. So we also have earnings season, which is going to pick up at the end of this week. Started with global luxury conglomerate LVMH, which is expected to report on Wednesday. And then that's going to be followed by Delta on Thursday. And then some of the globally systemically important banks on Friday with JPM, Citi, BlackRock, Wells Fargo, and PNC. This earnings season is going to be extremely important. We can expect about 85% of earnings reports by market cap within the next 4 weeks, with the biggest week being the last one in April. So that's where we'll get the Apples, Amazons, and Metas of the world. So stay tuned for that. The earnings season is just getting started here. This earnings season is going to be extremely important for investors. The most important one since last earnings season, as Alejandro often likes to say. But according to our friend Aisha Tarek over at TraderAid, the market is expecting an earnings decline of about 7% in Q1 for 2023 of the S&P 500. This is expected to be the worst pain felt in terms of quarter over quarter earnings growth. This minus 7% number is expected to be the worst EPS growth that the S&P 500 sees before ultimately rebounding, although slightly. A small rebound is expected in Q2. So again, these are just estimates, but the market is anticipating that this last quarter that we just got through is going to be the worst for when it comes to EPS growth. So we'll have to pay attention to how the companies are reporting and what sort of forward guidance they're giving, if any, going forward about how higher prices and lower demand is impacting their businesses. Speaking of higher prices and lower demand, margins are expected to come down and continue to compress as lower demand and higher input costs strain businesses. The S&P 500 net margins quarter over quarter are expected to fall to their lowest level since the pandemic. So it'll definitely get interesting here. We're going to have to see exactly how these companies are doing in this highly inflationary environment. Mander, what else you got?
Yeah, huge earnings season among us here. I actually just saw after the rally we saw in the megas, really since the bank run, but year to date in a lot of these companies with Microsoft, Apple, that week of earnings in the 20th to the 24th, I believe it was, now accounts for 42% of the entire S&P 500 just in 1 week there. So I think we're coming up on a huge earnings season. This week, I'm really interested for the banks. I think everyone's going to be looking at that hold to maturity debt portfolio that really stemmed the bank run in the regionals. But the ones reporting this week, I don't think they're really at any risk here. They're obviously well run. They're the biggest banks in the world, as you were saying. You have Citigroup, you have JP Morgan, Wells Fargo, to name a few. So what I'm really watching, and it was the same in last quarter, I want to see their provisions and how they're marketing and allocating capital towards credit card delinquencies. I think that's going to be a big one to really show how the consumer is holding up with continually increasing rates here. We talked about that credit card balance and at all-time highs for the consumer many times here on the show. I want to see how they're starting to provision out capital for the potential for delinquencies coming up, or if that's already starting to take place and they're seeing an uptick in delinquencies already. That's going to be my big watch for the banks this week. And speaking of rates, let's cover the data from Friday. Obviously, markets were closed, so you guys didn't get to have us live here on Friday, but we had data come in on Friday for the labor force. And what we saw kind of surprised me. We saw a resounding strength still in the labor force right now. Non-farm payrolls came in 90,000 less than last month at 236 and 3,000 below consensus, but unemployment rate still fell and came in at 3.5%, actually down from last month and below consensus, which had it unchanged. So, regardless of what we saw, I think post Powell at the FOMC meeting last month, we saw big upticks in initial jobless claims coming throughout the month of March. We actually saw unemployment rates still come in lower than expected. And now going into rate probabilities, which is what I really wanted to cover here. Right after the strong data report on Friday, markets are no longer pricing in this pause that we talked about on here. It seemed like that was the favorite going after Powell's speech at last month's press conference. Markets were pricing in a large majority in a pause coming in for this meeting. We now have a 2/3 probability of a continued 25 basis point hike coming up in May, with then a 65-ish% chance of the pause coming in June. So for now, markets are still binding with Powell saying higher for longer. So we'll see. That would put us at 500 to 525 on the federal funds rate.
Yeah, also interesting, the previous week's jobless claims. So on Friday, I believe that they revised up the jobless claims from last week as well. No, they revised those up to 246 from 198. So yeah, it is weird. You've been getting a level of data consistent with the contractionary economy, which is good in the sense that it would sort of force the Fed to take more seriously the idea of a pivot, which, in turn is good for stocks down the road. And I get the game that people are playing. But we're in a situation where the labor market is still so hot that it's very hard to justify, any sort of hawkish pivot really anytime soon. I guess under the surface, if you look at the data, I mean, job openings first time under 10 million, since 2021, things are getting consistent with, where you would want to see maybe for a pause. So I guess it'll really just be up to this next incoming data and anything, I guess, in the earnings reports to, I guess, really sort of bolster the Fed's decision making going into this May meeting. I guess we'll just have to see.
I think CPI this week is going to be a big play in that, because we're definitely starting to see some contraction in the labor force. But ultimately, if inflation still comes in hot with their dual mandate, I mean, unemployment just came in at 3.5%, so nowhere near recessionary in the labor force yet. So I think just given their dual mandate, if inflation comes in hot, they are in no position to pause yet.
Right. Yeah. This is going to be our first. This is going to be our first data on inflation for the month of March since that month ended. So it'll definitely be provide some more clarity for the market. But that'll wrap it up for us here at Fed Forecast. We will pass it back to Alejandro.
All right, I think we're just going to get right. Alejandro is you king.
Damn, that's crazy.
Let's go. We'll see. It's tough to be at the top, right? Let's see.
Yeah, look, it was a good run. I think this is the first time that we've had somebody else at number one in several months. So it was a good run. It was a good run. I hope that you treat that that spot with, the responsibility and due diligence that it deserves. It's not easy to be the top, like I always say. So hopefully you carry the torch, Mander.
I think I'm a half
see it one more
up
time.
here. See if I can hold it.
Let's see it one more time. Wow. Really tight, those top three spots. All right, let's go. Let's get right into it. The indices are down about 0.5%, slightly down after a really nice rip on Friday. What do we got today? Green or red, Diamond?
I'm gonna go red. I'm gonna go red. I want to see red today. I want to see red tomorrow. Green the rest of the week. Let's do it.
Sal.
I'm also going to take red today. It looks like a lot of the megas are down going into the session here, so I think we stay red.
Safe play.
Hondo.
Red.
Snipe.
Yeah, I think it's going to be red across the board.
And Mo.
Red as well. Red.
All righty. Let's get into the second question of the day. So I'm sure that a lot of you guys have been seeing the turmoil as far as the U.S. dollar, China yuan, Russia, Iran. So just in, Iran said that they're reducing their dependence on the U.S. dollar for regional and international trade. Just this weekend, France and Europe said that they want to shift their dependence of that U.S. dollar. Meanwhile, Russia, Saudi Arabia, and China are now already trading with the Chinese yuan. It seems like this is a pretty solid move against the U.S. dollar and currency. Just a couple of days ago, also Powell was asked if the actions by Russia and China to establish different reserves in non-U.S. dollars concern him, and he said the U.S. dollar is the only serious candidate for world principal reserve currency. What do you guys think? Is this time to panic for the U.S. dollar, Sal?
I don't think it is yet. I agree with what Powell is saying. I think as of right now and as it stands, it is the only qualifying candidate for reserves. But I do think this is worth noting for sure and kind of not ringing the alarm, but getting prepped to ring the alarm. I think in terms of the euro and France there, it makes sense, right? If China, if Russia, if the Saudis are getting rid of the dollar, you have to hedge risk. And so it makes sense to then hold less and start diversifying more. But as it stands right now, I don't think this is yet time for panic.
Right. What do you think?
You know, I'm definitely keeping my eye on the U.S. dollar a bit more now. I don't think it's really necessarily time for panic in my eyes. Want to see really what we end up doing within the next couple of months, but definitely not some good news coming out lately.
Noah.
Yeah, I mean, I agree with the guys. I think, at the end of the day, this is like not a transition that you can make happen overnight. Like the United States dollar has been the global reserve currency for the better half of a century, and that's not something that you can just sort of snap your fingers and have a couple of people get together at a little party and change that in a couple of weeks. So while it may be like a longer term thing that we need to definitely address, it doesn't seem like something that in the immediate future is going to have the drastic impact that maybe the people writing Twitter threads would lead you to believe.
Mo.
Look, man, all I gotta say is gold is king. Gold is king, and personally, I think it is something to worry about. But a point Noah just hit on that it's not an overnight thing. It's going to take time, even if this currency is dying. But it will take time. But not financial advice. All I'm saying is gold is king. Gold is my safe haven, and that's all I'm looking at for now. And I am worried about the dollar. It's not something just to not, look at or give any attention to. It's always good to be prepared and diversify, but gold is king, man. Gold is king.
Gold is king. Let's end it off with Hondo. Thoughts?
Yeah, I think everybody was freaking out because recently China struck a deal with Brazil, and they're not going to be trading through the U.S. dollar. They're basically trading directly through their own respective currencies. But what a lot of people fail to realize is that the Chinese yuan is pegged to the U.S. dollar. So it's not as big of a deal as Noah was saying, as people are making it seem. There is area for concern. I think that's fair, but at the end of the day, I think that we're going to be all right. But something to monitor into the future.
All righty, beautiful. That's going to do it for Bet the Bell. We'll pass it back to Alejandro for the system.
All right. System time it is. We didn't get to talk about it on Friday. Here we go. So things have been interesting. I have been saying that monitoring the 1 hour 50 SMA is going to be of importance. And that's exactly the mindset that I have carrying into today. So 50 SMA on the 1 hour chart is in a strong uptrend. On on Thursday, the market rallied about 30 points higher from the lows, and it was really no surprise as to where we bounced. So we break below the 10 SMA on the 1 hour chart. That is our signal that momentum of the crazy 160 plus point rally that we saw was coming to an end. So we break down below, we come down, we test the 50 SMA on the 1 hour chart for the first time, and we get a relief rally. Now, the S&P futures are down here in the pre-market, so it's going to be interesting to see where we open. On the 30-minute chart, we closed above the 50 SMA. I expect us to be opening, if things hold as they are right now, to be opening below the 50 SMA, okay, on the 30-minute chart. And if we can break below the 50 SMA on the 1 hour, that's going to be a complete shift in momentum and a complete shift in the narrative from what we've been seeing as of late, because trading above the 50 on the 1 hour has been bullish. I've been saying that the market is in an uptrend as long as we continue to do that, okay? Now, different story. If we trade lower, I think that the market is finally ready for a legitimate pullback, maybe a leg down. We have absolutely ripped as of late, and so it would not surprise me. But that's really what we want to be paying attention to: the 50 SMA on the 1 hour, and then if the two charts start telling the same story, we could see a sell-off or a downtrend beginning here on the higher time frames. But until that happens, likely chop or we trade higher. Okay, guys. So that's going to do it for the system. We're going to start now with a new segment that we're pretty excited about here. So every Monday, we are going to be giving you guys some charts and some particular stocks that we're looking at and making predictions as to where we think these names can head by the end of the week. These, are the way I'm treating it, at least, is it's an actionable trading idea, right? That's what we're trying to do here. So I would say you guys should listen up. There's going to be some good ideas that we're going to be floating around here, and we can go ahead and get started with that. If Ryan wants to.
I ain't check the price. I got it.
Beautiful. All right. I can go ahead and kick it off. If Ryan wants to throw my chart up here. So a name that I'm watching coming into this week is Tesla, and as you guys know, I'm a pretty big Tesla bull, but I actually like this name to the downside. So wasn't able to show it in a chart, but Rocket Scooter, we got the 187.5 monthly hedge pressure break, which was a massive support level, and so that's what really put my eyes on this particular name. So I'm bearish on the stock as long as we're trading below 187.5. And a target I have this week is 167. So I'll definitely be looking to play this name to the downside. Also going to be watching the rest of the market. And if that narrative shifts where the bears gain control on the broader market, I think that names like Tesla and Apple are likely going to be leading that spill to the downside. So 167 target on Tesla going into this week.
All right, so my pick this week, I'm going with Microsoft. We are testing a super big trendline resistance level after the bullish engulfing on Friday. Look, all of these names, not just Microsoft, not just tech, really for the broader market, all of these little red days that we're having, and people calling for a pullback, calling for the rollover, they've just been on the daily, looking at the larger time frames, they've just been smaller pullbacks into newer highs. I'm going to play with that segment. I think Microsoft fills this gap that we have on the daily from quite some time ago. to 297, and I think we get see 300 this week. We're trading a little bit red in the pre-market. The name's just been really soaring, so I could see somewhat of a pullback or some consolidation as we approach this 300 psych level. But for me, I think that this 297 gap fill level is going to fill this week. I'm looking for new highs. I'm going to stick with that sentiment until we actually see confirmation and a rollover, not just a 1 or 2 day 1 or 2% pullback. So that's what I'm looking for on Microsoft.
All right. So chip sector, Intel. This name has been on a tear. We got a nice shooting star at peak into. I forgot to line this level up. This 33.84 level, 0.8 level, which is the peak of the wick on that shooting star on the daily time frame. So strong run up. I do think this has some more upside. We do have a gap fill. You might not pick this one out, and more towards the gap fill at 39, way up there. But there's a gap fill where I lined up right there at 35.2. So I'm looking for Intel to hit that. I'm actually, happy that we did dump pre-market and Noah hit on that Monday, Tuesday, two red days, and then we have green the rest of the week. I'm with him on that as well. So get green rest of the week, come into that gap fill. Then next week, let's just dump this market again. That's what I'm going to be watching, is a gap fill on Intel for Mamba's gap fill reversal. My favorite swing strat.
This one is Amazon. Amazon's gonna be my top watch for the week. We have what appears to be sort of like a basing formation in Amazon, and then you have a volume balance overhead up to that like 110, 112 area. This 104, 105 zone has sort of been the line in the sand since that gap down off of earnings roughly 6 months ago. They can get some momentum over that $104 level. They may want to explore this volume balance and can see as much upside as 110. If this 104 continues to reject, we will have a trend line break on this chart, at which point we can share some downside ideas. But for now, looking for that 104 break to confirm the strength, and then possibly a move up to 110 off of that.
All right. And what a boring name for me here. I'm watching TLT here, the long dated treasuries for upside, actually. Along with gold, along with silver, we've been seeing those recessionary trades get placed under the hood with a massive rally in TLT breaking out of this flag, pennant, whatever you want to call this, to the upside with gaps to fill to 112. That'll be my first target.
All right. Awesome stuff there, fellas. We're going to now wrap up the show with Moe Mamba, who's got Mamba market analysis for us.
Go ahead here and share my screen. It's massive, massive. They were just infamous trend line right here.
Muted.
Sorry. Boys just came at me now with that one. So SPY daily time frame, head and shoulders, guys. This thing is still intact. We have not invalidated this HNS. The big thing we hit on last week is if we do get this pullback, this 408.3 level, we ended up testing and closing. I really thought we would come up to the upside off of this close, right? We came down, held support despite the wick, strong buyback into the close above the level, right? That's what you like to see for further upside. Nope, market did its thing, gap down, but came down into what? Our daily demand. This is a 3-point daily demand, 406 to 403. We came right into that 406, tested it in a strong bounce. We did that on Thursday as well. So Wednesday and then Thursday, we tested that level twice. We were able to hold it. Thursday, strong buyback above that 48.3 level and above that Tuesday's close. So this is a strong bullish bias heading into today, right? But again, we got another market gap down. Will be interesting. The big thing to watch now is this 406 level. See if we're able to hold that 406 level intraday. The important thing I'm going to look out for is do we flip that 406 intraday? So for day traders, do we flip that 406 intraday into resistance? That's what I'll be looking for further downside. And coming down, you probably two levels I'm going to point out here is this 405 and then I think 404.3. So 405 and 404.3, and then your big level, the lower part of that daily demand at 403. So 405, 4.3, and then 403. Those are levels to watch for intraday. But main thing, again, watch 406. Let's flip that into resistance with further downside. Otherwise, I'm with Honda on this. I do think we chop up into tomorrow and potentially even Wednesday CPI and FOMC. The big area we got to get out of now. I think we'll just be stuck in range until then. Let's hope the rest of the market gives us some good price action to trade off of. Thanks, Hondo.
All right, Mo, thank you. That's going to do it for this morning's show, guys. Appreciate everybody who joined us. If you're watching on the YouTube, do us a massive favor. Hit that like button. It helps us out a ton. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com. We've got that 7-day free trial going right now. Other than that, trade smart, manage risk. Again, appreciate you guys for tuning in and watching the show, and we will catch you back here on Wednesday morning at 8:30 a.m. Eastern Time. Have a great day, everybody.